You're watching BCTV. We're all about Brantford. You're watching BCTV, Brantford Government Television, a service of Brantford Community Television. This program is brought to you in part through the support of the town of Brantford.
I just gotta watch it at Christmas time. The decorating stuff.
Okay, we're going to get started. The Town of Brantford Board of Finance, regular meeting, November 25th, 2019. First on the agenda is to approve the minutes of the August 26th meeting.
I'll move the acceptance. Second.
Been moved and seconded. Discussion? All in favor?
Aye.
Next is citizens' comments. We ordinarily have a time period set aside for folks from the audience who would like to comment on the agenda items for tonight. If there are anyone who would like to come forward. Okay, if not, I would like to acknowledge the board has received a letter from Wayne Cook with questions with regards to the fund balance, and I will distribute that letter to board members. Next is to hear a presentation from GYL Financial Synergies and Hightower Advisors with regard to the performance of the town's police pension plan for the quarter ended September 30th, 2019, and if necessary, rebalance the portfolio. We'll also discuss the volunteer fire incentive plan as well as the other post-employment benefits plan. Welcome, gentlemen.
Thank you. Good evening. Happy to be here. As customary, I'll take you through a recap of the market environment and conditions for the reporting period ending September 30th, 2019, as well as some comments to link to the most recent current market performance and some economic backdrop. And then Michael will take us through some of the details on the financial returns of each of the buckets of money we're reporting on. As we're all well aware, we've had a very interesting environment for the year when we look at the calendar year 2019. For the third quarter by itself, the markets were fairly flat. The large U.S. equities were up about 1.7% for the quarter. Mid-sized U.S. equities were flat and small cap equities were negative. International markets, the developed international markets were negative, and emerging markets were even more so negative on the quarter. With positive returns in the fixed income markets due to further declining interest rates. As we flash that forward from September 30th until today, a lot has changed in the equity markets. We've had a significant advance in U.S. equities as well as developed international equities since September 30th. As it stands today, at the end of the quarter, U.S. equities were up 20% as far as the S&P 500 for the year. And through today, we're at an all-time closing high on large U.S. equities as measured by the S&P 500 at up over 27% on a total return basis for this year. So we're seeing, a very positive equity environment and also very positive returns on the fixed income markets. So it's been a very healthy year on a market basis, and the economic data supports the expansion we're seeing in equity values, and it also shows that equities are reasonably priced when we look at the earnings of the companies and how earnings are continuing to expand. And we've also seen in the most recent earnings reports that the majority of U.S. companies had positive surprises to their earnings. So these will all lead, in our view, lead to being constructive on equities near term. That does come with some overall risks that we're all aware of, things such as the trade war with China. There's been some positive news as of recently that's also led to further positive activity in the equity markets. The noise of the impeachment proceedings down in Congress, how will that play out? How will that evolve? That's a big unknown. So that would be a risk to the markets. The uncertainty as to who will be the Democratic nominee for president to run against the Republican Party. As that shifts and changes over time, that will create some level of volatility. And as that platform starts to shape, it will create some other volatility in the marketplace. And then we always have the big unknown of Trump's personal characteristics and how they influence the market behavior from a tweet-to-tweet basis. So those are always the variables that we can't control, but we know are out there. So with that, we've seen, as I said, very good returns in equities throughout the year, led predominantly by large U.S. equities, followed by mid and small U.S. equities and developed international. Emerging markets has been the laggard. And emerging markets is predominantly Latin America and China have really lagged the developed markets. We've seen reasonable returns in advancing markets in developed Europe, which has been very healthy and additive to things as we're seeing that marketplace evolve. As we've mentioned in the past, we've touched on the shape of the yield curve when we talk about interest rates and Federal Reserve policy. The Federal Reserve did cut rates again on October 30th, bringing us to 3 interest rate cuts on the year, bringing the Fed funds rate down for an upper bound at 1.75%. The expectation we're seeing in the market at this point is they do not expect further rate cuts this year. Granted, we only have a month left in the year. And the expectation for 2020 on interest rate policy is mixed at the moment and not a lot of clarity as to, if we will see more than 1 or more rate cuts in 2020. Seems to be a possibility, but the Fed is starting to see positive GDP and positive CPI data towards their targets, which could lead them to go to a no action stance, which would be a very comforting thing for the markets. And that is when they talked about the yield curve from there. Overall, the yield curve is flattened substantially, meaning the relationship between short-term and longer-term rates is very narrow. The barometer that people talk about in the market is the difference between the 2-year Treasury and the 10-year Treasury. As it stands today, that difference is 14 basis points, so less than 0.25% difference from a 2-year Treasury note to a 10-year Treasury note. A year ago, that difference was 23 basis points, so that has flattened. When we reported last time to you, that difference was at 0. So we've seen it since then steepen back up just a little bit as we've seen some positive growth expectations build into the economy. So that's a positive indication from what we see and what we look at. And the conjecture about an inverted yield curve and what it leads to, we didn't see a material inversion in our opinion. And we also believe that that period where the yield curve was arguably inverted was driven by other factors outside of Federal Reserve policy. And on a positive note as well, the level of negative yielding sovereign debt globally has decreased slightly. So we've seen interest rates start to rise globally, where we previously saw over $17 trillion in negative yielding debt. That number has come down to less than $14 trillion. Now it's still a very large number of negative yielding debt, but it's a positive thing to see that coming away from that, seeing less negative yielding debt. So with that, I'm going to let Michael take us through the experience of the fund. It gives you a little bit of a backdrop there.
Sure, we got a question?
Yes, Charlie.
So why do you think the fixed market or the fixed income market is doing well?
We've had a decline in rates as a function of slow growth globally, and as a result of the U.S. having some of the best interest rates globally has pulled a lot of global dollars into the U.S. bond market, which has pushed U.S. interest rates lower, which pushes bond prices higher, which has led to positive returns in the fixed income markets. And that's a very, very short encapsulation. Be happy to expand on it in a lot more detail if you want to have a conversation about it.
Thank you.
So,
Mike?
Great. Thank you all. So if everyone would please turn to tab 1, page 20 in your books. Let's start with the 35,000-foot view of the plan. Starting on the top right, you can see that the annualized return going all the way back to 4/1 of 03 has been 5.66%, right on par with its benchmark, which has returned 5.68%. On a total return basis, that's 148% total return for the pension, right in line with the 148% return of the policy. That return has come with about 9% less volatility than that of the underlying benchmark, and that's indicated by the portfolio beta at 0.91. That's on just a 100-point scale, so a beta of 0.91 is 9% less volatile than the benchmark. So in essence, you've gotten 100% of the return of the benchmark with about 9% less volatility. So on a risk-adjusted basis, that's a positive risk-adjusted return, or alpha, which you see a few rows down, where you can see alpha 0.04 versus the benchmark, which is just at 0. So all in all, the conservative stance of the pension plan and the kind of the ongoing decisions to invest money kind of slowly and methodically continues to bear fruit, as the return has been consistent with that of the benchmark and the volatility has been somewhat less. In dollars and cents, we can see that on the bottom right of page 20. Since 4/1/03, the beginning value of the pension was $8.3 million. As always, ignore contributions and withdrawals and focus on the net number. $1.865 million in contributions received above and beyond benefits paid, and $15.5 million in earnings, bringing us to the $25.688 million as of the end of September. Since that time, as you know, the market has continued to move in a positive direction, and as of Friday's close, the value of the portfolio has increased by a total of $972,000. That comes from a combination of net positive cash flows of $593,000 and investment earnings of $379,000. So the value as of Friday's close was $26,660,000. Turning back to page 16, at the top line in blue, we can see the portfolio returned 0.5% for the quarter. Year to date, it's returned 11.83%, and for the trailing 1 year, just shy of 4%. For 3 years, the return has been just shy of 5%, 4.25% for 5 years, and 5.92% for 10 years. Relative drag versus the benchmark for 2 reasons. One, because of the relative overweight in cash, which the portfolio has long been overweight in cash, both as a tactical investment move, as well as to allow for cash availability to make benefit payments. And then in addition to that, you see a slight drag on the relative performance of the high yield, or of the fixed income portfolio rather, owing to the more stringent credit quality restrictions that are imparted on the portfolio versus that of the benchmark. You'll notice, going all the way back to inception, that those credit restrictions have been additive. There have been about 18 basis points in excess return from the bond portfolio, but more recently, when the market has embraced risk on both the equity and the bond side, it's led to a little bit of a drag. Certainly on an absolute number, as Rob alluded to, you received just shy of a 10% return on your high-quality fixed income portfolio for the trailing 1 year. Certainly well in excess of anyone's expectations about a year ago, when there was a lot of concern about the potential for dramatically rising rates. But certainly the overall 10% return for the trailing 1 year, very strong on both an absolute and relative basis for the bond portfolio. So with that, we had a discussion with the finance director both Friday as well as again today. We're not recommending any rebalance. We will, at some point in the next couple of months, probably need to raise a little bit of cash, but there's plenty of cash for benefit payments for the next several months, and so we do not recommend rebalancing the portfolio at tonight's meeting.
Thanks, Mike. Any questions on this fund report?
Okay, let's actually skip past tab 2, which is the OPEB, and go to tab 3, which is the volunteer fire. We'll cover this relatively quickly, since it's substantially the same portfolio as the police pension. Just really the one notable difference is, and I'm on page 16 of tab 3, the one notable difference is the fixed income is passively invested versus that of the pension. That's just owing to the relative balances. There's just about $500,000 in fixed income between both high quality as well as high yield fixed income. So the return for the portfolio is 0.51% for the quarter, 11.75% for the trailing 1 year, for year to date, and just over 4% for the trailing 1 year, and 5% for the trailing 3 years. Since the end of the quarter, The value of the plan has increased by just under $12,000. There have been $7,000 in outflows and $19,000 in earnings. And the value as of Friday's close was $1,206,000. And much like the police pension, no recommendation to rebalance the fire pension this evening.
Okay, any questions on this fund? Okay,
So with that, let's turn back to tab 2, please, and we'll review the OPEB. Let's start on page 21, again with the 35,000-foot view. And much the same story as you saw with the pension. Annualized return spot on with the benchmark at 5.35%. That's led to a total return since inception of July of 2011 of 53.75%, and that's come with about 19% less volatility than that of the benchmark, as indicated by the portfolio beta, which you see at 0.81. So the risk-adjusted return, or alpha, has been positive, and you can see that alpha number a few rows down at 0.08 versus 0% for the benchmark. In dollars and cents, you can see beginning value of the OPEB was just over $4 million. There have been about $9.86 million in net contributions since July of 2011, and $4.44 million in earnings, bringing us to $18,339,000 as of Friday's close. Turning back to page 16. At the top line, the return for the quarter for the OPEB was 0.21%. Year to date, it's returned 11.4%, and then we can see just over 3% for the trailing 1 year, 5.65 for 3 years, 4.59 for 5 years, and then 5.35, as mentioned earlier, since inception. Performance of the underlying investments being passively invested is consistent with that of the underlying portfolio. And again, just a note with regards to the relatively strong positive returns from the high-quality fixed income over the trailing 1 year, kind of contrary to what the prevailing wisdom was about this time last year, when there was a lot of concern over rising rates. Since the end of the quarter, as you know, there's been a change in the methodology, if you will, with the OPEB, in that current we're going to start paying current benefits or making money available to pay current benefits out of the OPEB trust, and the town has consolidated the medical self-insurance fund with the OPEB, so the value has increased dramatically. It's increased by about $5.69 million. The majority of that coming from positive cash flows of about $5.35 million and earnings of $342,000. So that brings the value as of the close Friday to $24,028,000. We're currently having discussions with the finance director as to how to approach investing these dollars. And so what we're really considering essentially is putting the fixed income portion of the allocation, which is roughly half, to work immediately, and then legging in the risk assets, namely the equities and the high yield bonds, over the next several quarters, kind of consistent with the way things have been approached with both the pension and the OPEB for many, many years, in that we want to get the conservative assets invested, but then have the risk assets, since there's such a large relative proportion of cash right now, have that money come in, kind of slowly and methodically. And we're still having some conversations. We've had, I think, 2 or 3 discussions already with the finance director, and we're kind of finalizing the methodology as far as how we would approach that.
thanks, Mike.
Yeah, so I would just add to that, we expect to have a more formal recommendation to the board on that at the next board meeting.
Okay.
Good one.
Questions, Charlie?
Mike, the performance numbers seem to be very similar for all 3 accounts.
Yep.
Earlier, you mentioned both the fire and the police had similar investments. How about the OPEB? Is that similar to the other two?
Yes, it is. I mean, it's similar in that it's passively invested on the equity side, actively invested on the fixed income side. Slightly different asset allocation. So maybe I should have clarified a little bit more. The fire and the police pension have basically identical target asset allocations, whereas it's slightly different with the OPEB. But the underlying investment lineup is very similar. Really, the significant difference is the core bond or high-quality bond in the OPEB and the police pension are actively managed by Mesirow, whereas in the fire pension, because it's a much smaller amount of money, that's in a Vanguard index.
Thanks.
Okay, other questions or comments on these? Bob?
Just a
welcome.
comment on the 10-year. So it came very close to getting to 2. It was at like 1.97, and it reduced. Second quarter, you see it hitting over 2?
So you mean the 10-year treasury?
10-year treasury?
Yeah.
The current consensus is that the 10-year treasury is going to stay below 2% near term, as we have substantially low interest rates domestically, and also the pull down from having negative interest rates in Germany and Japan make the U.S. Treasury one of the best options for sovereign wealth. We didn't think we would be back into a declining rate environment like this as quickly as we have been when we sat in this position a year ago. But here we are. So I think maybe 2 years from now, if we can start to see some inflation, we can start to see the 10-year treasury move back over 2. But it's going to take a bit more inflation and GDP growth for that to happen, along with some meaningful stability from a political perspective and a trade war that gets ironed out. So those things need to come together to create that stability, and then there's a lag from there.
Great, thanks.
I think to Rob's point, there's a fair amount of demand as well, because as low as our rates are, they're downright generous compared to the competition. And so whenever we get an uptick in yield, the buyers come in and
Great.
it drives it back down.
Good, thank you.
So, a question, Europe, they have a lot of negative interest rates. Do you see us ever trending towards that phenomenon?
I'm never say never. Of course, if the president had his way, we'd have negative rates already. But I think there's one kind of fundamental difference between U.S. and Europe, and that is, if you think, what exactly are interest rates? Interest rates are essentially money that, I'm going to use people in the generalities, but it's money that people that want to consume but don't have the funds to consume today pay to people that don't want to consume but have the funds available to consume today. And so essentially it's kind of this transfer, if you will. And in Germany in particular, there's such a kind of a cultural view towards savings, and they have to have a balanced budget, et cetera, that they're really in kind of savings mode. So unless that kind of changes, and there's an acceptance of the fact that the government can go out and borrow money and actually have to pay back less than it borrowed, and some deficit spending happens, it's likely that we'll continue to see very low, if not negative rates, at least for the foreseeable future in Europe. But in the U.S., we don't have that quote unquote issue with balanced budgets and a lack of willingness to spend. And so unless things really kind of take a turn for the worse, our feeling is that we'll probably continue to have positive rates, although low rates in the U.S.
Thanks, Mark. Other questions or? All set? Thank you, folks.
Thank you all.
Next is to consider and if appropriate, approve a request from the Human Services Director for following 2020 transfer. It was a request to move $17,500 within their budget. My understanding of that has been taken back for now, and we'll consider that at a future meeting. So we'll
So it's withdrawn?
withdrawn. We'll withdraw that request at this point. No action required. Number 7 is to consider and if appropriate, approve a request from the Recreation Director for the following 2020 transfer from snow removal. These are in capital funds, Jim, the 700 accounts?
Yeah, those are 700 capitals, right?
Yep. Snow removal equipment, $159. Community house roof, masonry, $28.88. Foot park tennis court fencing, $75,000 for a subtotal of $78,047. Transferring into tree removal, pruning, $3,047, and foot park capital improvements, $75,000 for a total of $78,047. Alex, welcome.
These 700 capital accounts, one of the reasons I'm before you tonight is we were trying to finish up on a project with the foot park renovations of the restrooms, and we went out to bid, and 5 of the bids came in ranging from $163,000 to $233,000. We looked at the scope of work of what came in. We felt comfortable with the project with the $163,000. We'd like to go forward with that. But in order to do that, we needed to transfer some dollars. We were $70,000 short for the project. And in last year's request from the Foot Trust, we had put aside, once again, $75,000 for the tennis court fencing. Those dollars are already in our capital budget. We're transferring those dollars so that we will be able to move forward with that project and have it completed in the spring of 2020. In our request for next year's, we're actually doing it right now. Actually, a letter was sent out today, I believe, from First Selectman Cosgrove, moving forward on this transfer and the request. If you remember last year, I came to the Board of Finance to request dollars for the upgrade of the 4 asphalt tennis courts down at Foot Park, which also included part of the fencing. And our request this year, that is going out this week, is going to request dollars to be able to complete that project in 2020 for our request. So that's the request from Foot Park tennis court fencing to Foot Park capital improvements. I know we don't have an account number there now, but going forward, if we're not able to get, we have some dollars left, we're hoping to be able to have an account in our capital account that would be of capital improvements, whatever they may be. If you remember in the past, we've done, each year, the Foot Park has granted us approximately $75,000 in capital improvements, along with $125,000 of operating expenses. Again, I think I say this every time. Again, those are not tax dollars. Those are specifically from the Foot Trust. So I don't know if there's any questions on that before I do the other 2 transfers.
Yeah, Alex, I had a couple questions. What was the estimate for that originally?
The estimate, it goes back a few years when we had it in our capital, was approximately about $75,000 originally. We thought we might be able to do it for those dollars, but we were definitely not.
How'd you come up with that when you're so far off the mark?
I can't really answer that from not doing construction on a restroom, outdoors there at that point. And I think if you remember last year, I came back to you in October, transferred dollars to, we figured it was about a $100,000 project, and we transferred $93,300 that is in that project at this point. And obviously, we felt that that was a fair price, coming back when the scope of work that was out there. We also, it also includes a sitting wall on the outside of the area for people to sit. So
Was the scope increased, or it just the construction costs were not estimated correctly?
I think they weren't estimated correctly.
And
We thought it would. We actually thought it would be done for 50% less. a square foot at the time, you know, so.
And the foot trust is okay with the reallocation of dollars?
They have been in the past. The letter just went out. I believe they will be. They have been. They have been in the past. We've had extra dollars each year that they've been able for us to utilize for other capital programs than we've transferred before.
Thanks. Questions from the board, Charlie?
Alex, first of all, thanks for the tour of the new building. It was impressive.
Welcome.
I think I heard you say...
You got a tour?
Yeah, I
Yeah,
did.
well,
Well, several of us did, who were not on vacation.
That's pretty good.
Anyway,
You were invited.
so you're not going to go forward with the foot park, the tennis fencing now, but later on you'll come back and ask for some funds in order to do that.
Our request in the next year is for, in 2020 with the Foot Trust, is to be able to do that whole project. To
So
be
the
able
money
to-
will come from foot.
Correct, hopefully, yes.
Okay, thank you.
Other questions from Alex?
I'll move it.
There's another part of it, Bob, that
Oh, you wanna
the
do
pruning,
both?
we have to drill them on the pruning here.
Yes, you'll see a transfer from snow removal equipment. You might see this little Ventrac piece of equipment that's going around town with the sidewalks. It's actually, we have a brush. We just got it last year. It really was effective in doing some of our sidewalks. We're able to, we have a V-plow on it. We have a sweeper on it. And it's worked pretty well, and we're looking forward to using it again this year. It worked well. There was $159 left in that line item, so I figured since I was coming tonight, it was a good opportunity to transfer that into another account where we could use some dollars. And then if we go way back, you'll see community house roof masonry repairs of $2,888. That has been in there for a few years. That was part of the project, some of the masonry work we did on the community house for the exit signs of the gymnasium. Those dollars were left over. This year, you granted us $20,000 for tree removal and pruning throughout the community at our parks. We continue to not only prune trees, but trees are falling down. We're removing some trees. We're looking at diseased trees. It's happening throughout the town in many areas, and we just utilized about $11,000 already this fiscal year at Brantford Point, and took down many trees and did some pruning. So we figured that to utilize some of those dollars to put it into that account because we believe that we'll have more as time goes on.
Thanks, Alex. Other questions? Bob?
I'll move it.
Bob's moving it. Somebody want to second this?
I'll second it.
Seconded by Jeff. Discussion? All in favor?
Aye.
Well said, Alex. Thank you.
Thanks, Alex.
Next is to hear a presentation from Dan Cosgrove, Animal Shelter Commission on the expansion project plans. Maybe.
Hi, everyone.
Hello.
Hello.
Well, thank you to the board. It was actually my suggestion that Laura and the commission come before you tonight just to give you a brief overview of a project that they've been considering. As I'm sure the board is aware, the current shelter was built just over 17 years ago. And that project had a tremendous amount of community support. Probably a town project had not seen that much community support, I would say, since the original community house that was built in the 1960s. You know, and since then, not only has that, has the shelter sustained that level of support, but I would say it has grown tremendously throughout our community. In talking with the commission members and Laura, this conversation had started a while back And they were trying to address a lot of the needs and the demands that are being placed on the services that they provide, on the facility itself. There's a lot of space requirements, the current layout, just because of the sheer success of the mission, of the programs that are provided, the amount of volunteers that support this shelter, has really brought them to a point where they wanted to look at doing a project. And with this, we have Joe Seapot, who was the architect involved back 17 years ago, and saying, looking at the current footprint and the area around the shelter, and how could they come up with a project that would, stay within that footprint or that property and meet the current needs and the future needs. So although it's really at the beginning stages in terms of design, the commission can speak, and Laura can speak to the process in terms of really evaluating those needs and working with Joe to develop a plan. However, I thought it was prudent for them to come before the board at this stage to just inform the board and have a discussion of this project. So not only the board is aware, but the public is aware. Eventually, we know, because the process would require, if it was to move forward, an authorization, regardless of the funds that may be raised. However, the commission is committed and has already received some significant commitments to funding this project through donations as well as grants, and have some current money in their fund balance to put towards the project. So with that, I'll just turn it over to the commission. They can kind of walk through it.
Thanks.
I think you mean Laura. It's fine. Thank you for allowing me to come speak tonight. The commission and I have been evaluating the shelter's layout and current building footprint for quite some time, and the reasons we've been doing this for safety and for need. Some fun facts that you might not know is that we take in about 500 to 750 animals per year, and we have about 12 to 15,000 visitors each year. And that doesn't include our volunteer base, and we have quite a large volunteer and networking base. Any volunteers who participate in our volunteer orientation program currently get trained in the lobby because of a lack of space. Dog training and handling skills are also held in the lobby or in the driveway because of lack of space as well. Visitors who wish to conduct meet and greets with their dogs or with our dogs at the shelter are held in the lobby. So as you can see, the lobby has become a central core of where we conduct a lot of our business, and it's really overused. Another area of concern is regarding the layout is the ventilation system and the room structures themselves. Each room in our facility shares the same ventilation system. What this means is when one cat gets sick, say with an upper respiratory infection, it contaminates all the cats, including pregnant mothers and any baby kittens we have. This in turn costs a lot of money to return these animals to a place of health. With that said, if a pregnant mother cat is dropped off or left at our door, she goes right into the adoption area. And if you can imagine, a pregnant animal is very stressed out and usually requires to go into a quiet room. And with this added stress, increases the likelihood that they're going to get sick. When we move on to the dog room, we talk about the heating system. It doesn't keep up with the wind chill that blows through the guillotine doors. And in the summer, since there's no air conditioning, the kennels are extremely hot and humid, and it's difficult for humans to stay in there, and not even talking about the dogs. And then going back to the shared ventilation system, if one of the dogs is dealing with a case of ringworm, it not only spreads to all the dogs, but then it goes into the cat rooms as well. That again is a cost burden and a welfare concern. So talking about welfare and safety concerns brings me to my next point. Animals that are being brought in as strays by animal control officers come in and out of the same door that the public go in and out. These stray animals could be disease contaminated or even of vicious propensity. And we are entering an exit where the public is mingling and conducting meet and greets with their animals. We have worked with staff, volunteers, business people, and other stakeholders to diligently and thoughtfully evaluate the current layout and possible future developments for the shelter. We are working with donors, writing grant applications, as Jamie said, and looking at other possible funding sources for this project. We invite you all to come visit the shelter and see what we do and see what we're planning for the future. I want to thank you again for letting me speak tonight.
Thank you.
Thanks, Laura. Just a couple questions before I open it up to the board. I see the picture here, as far as a scope, its level of magnitude, what are we thinking or talking about?
How big a building?
You're talking about dollar amount or?
Size of
footage.
square
Size of the-
footage, dollars, any other impact on operating costs?
Well, program-wise, what we're looking at, Joseph
Hi,
Seapot
Joe.
Architects.
Hi, Joe.
What we're looking at is, in meeting with the committee, is we're looking to increase the size of the front lobby entry area, allow it to then be more amenable to the public as they come in. We're adding animal visiting rooms. We are adding improved administrative areas. Again, animal quarantine and sick cat areas that were never even thought of back when the building was originally designed. It was designed more as a quote-unquote dog pound, and has evolved into quite a bit more. We're increasing storage, and then we're also trying to clean up the entry off of the road too. As you know, when you go in, or if anybody's been there, you're kind of an offshoot of the transfer station. So we're also looking into giving it its own identity off of the post road also. So this is just a conceptual idea of what we may be doing over here. I don't know if we have a defined square footage yet. We're still kind of playing with the scope of the work, but it's in early phases, so
What's the square footage now?
about 2,600 square feet.
I would just add, and I think, correct me if I'm wrong, because aside from this project, one of the things that we've been looking at, the town has been looking at, South working with the town engineer, is up at the transfer station, all that property that's down in the back, the circulation is very inefficient. We feel that the layout of where we're storing materials, the travel areas for the trucks could be better laid out in terms of, which would help with our stormwater quality and just the efficiencies. Doing that layout, I think, and Joe, correct me if I'm wrong, I think squaring off that would give the ability to probably increase the building footprint anywhere by 2,000 square, is that right? Or 2,000?
More than that.
Maybe a little bit in the back,
A little
then
bit more,
another,
yeah.
so 2,000 to 2,500 square feet.
Yeah.
So
So-
you're doubling the size of it.
That would be the potential, that's not, and then again, what they're going through right now, and is really looking at their needs and, okay, what, the lobby area, the room that they need to bring in the animals and introduce them, have the pet, what is then required for that? But they're basically fixed in that footprint of what I said, because they're not looking for another location. They're restricted in terms of by the property itself, where it sits on the property, and as I mentioned, the current operations of the transfer station. So that kind of limits what they can do.
So when do you think you might have some other more formulated plans? From our standpoint, obviously we're concerned about our future obligations and commitments.
We're thinking probably January, maybe February.
So by budget time, probably have an idea of where you're headed.
Yep.
Charlie?
Hey, Joe, do you have a sense of the size of the property?
As it stands now, or what we're looking
And
at?
then, I mean, like an acre, 2 acres, how much property is there?
I don't know, Jamie, do you know?
0.75 or
You
something.
think 0.75? Yeah, it's close
Yeah,
to
we're a
it.
little less than an acre. I believe.
It certainly currently occupies a little less than an acre. However, as I mentioned, we probably can grab a little bit more with the improving the circulation of the transfer station activities. But I think it's only about, 3/4 or 0.8 of an acre that is
Are
currently.
there gas lines there?
I'm sorry.
Are there gas lines available there?
Yeah, they do
Yes.
have gas at this year.
I mean, do you have gas now?
Yes.
There you go. Okay.
Do we provide services to other towns?
We do.
We
We
do.
provide services to North Branford currently, North Branford, Northbrook.
We receive fees for that?
Yeah.
So the current arrangement is that they contribute 30% towards our expenses.
I got another one. This is more general, but when I visited Laura, I saw the rabbits, and I saw the cats and the rabbits and the dogs. Is there any other animal that you house there?
Yeah, we have lots of animals.
Birds.
Birds,
Mice?
yeah, I mean hamsters, pretty much anything that's domesticated that you would find at a store somewhere, we will take in.
Yeah.
Fish.
Okay, other questions? Anything else you'd like to tell us?
We do have our Home for the Holidays event coming up on Monday, so if you'd like to come, we'd love to have you there.
Monday?
On Monday, yep, it's at Home Restaurant in the center.
What time?
It's from 6 to 9:30
At the facility?
at Home
At Home
Restaurant.
Restaurant.
Home
Home
Restaurant.
restaurant. Oh, I see. It's a fundraiser.
It is.
Oh, okay.
Good for you.
All right, good promotion. Thank you for the update.
Thank you.
Take care. Okay. Number 9 is to consider and if appropriate, approve a request from the Finance Director for the following 2020 transfer to reflect the recent approved collective bargaining agreement for the fire union. The agreement is for 3 years with an increase of 2.5% per year. Transfer from contingency, $103,529. Transferring into wages and salaries, $74,556. Overtime, $56.50. Overtime public events, $527. Vacation, $7,050. Holiday, $5,569. Sick, $55.69. Sick, $3,709. Education, $3,423. Accrued payroll, $625. And medic shift, $2,420 for a total of $103,529. And then a supplemental transfer from contingency, $3,100 into uniform and clothing, $3,100. Jim, do you have a number for contingency at this point?
Yes, with these two items, the total 106,629. The balance in the contingency would be 893,369.
I'm sorry, Jim, 893?
369.
369, thank you. Jim, you're going to handle this, or Catherine, or?
Yeah. Basically, you hit some of the high points. It is a 2.5% per year contract. That's consistent with a number of other bargaining units and the agreements that are there. There was a lot of language changes in this contract. One of the things that is going to go into effect is that the firefighters are going to go to a weekly payroll. They were on every other week. And then there was a lot of various language changes, as I mentioned before. And that was essentially it. I mean, there's a lot of clarification issues. One of the areas that did not see an increase and has not seen an increase in the wage area is the stipends stayed the same. So the stipends are a couple $100,000 and change a year. That still remains flat. So, and again, these are negotiations, not contests. So, you know, there are some things that we were able to hold on. Their premium shares typically were some of the highest of all the bargaining units, so we didn't make any changes significantly in the premium shares. So it's basically going to be 17% throughout the life of the contract. That's higher than the other ones. There was actually some push to lower that, obviously, from the union side. So again, I just want to emphasize it's a negotiation, not a contest. Overall, the town felt it was a fair agreement, as did the bargaining unit. It was also approved by the RTM as well. And so this is a transfer to affect that change.
Thanks, Jim. Questions on this transfer?
I'll move it, Joe.
Second.
Been moved and seconded. Discussion? All in favor?
Aye.
Thank you. Thanks, Jim. Next is to consider and if appropriate, approve a request from the Finance Director for the following 2020 OPEB funding transfer from health insurance premium, $727,000, transfer out to OPEB, $727,000. And we've got a letter from Jim that's explaining the setting up of the fund, which, again, it was a follow-up from some of the discussion earlier tonight with the investment advisors. Jim, anything else you'd like to add on this?
Yeah, sure. There's a few things to unpack here, I guess, is the way maybe I'll start. Is one, when the investment advisors were talking about allocating some of the additional cash that went into the fund, that goes back to the 2019 January meeting when we were looking at the self-insurance fund and looking at the OPEB trust and actually moving approximately $5 million from one to the other, and that increased the asset size. The funds aren't consolidated. I think he might have misspoke a little bit. They're still separate funds. But the thinking going forward is that we're going to start to treat the OPEB trust like a pension, okay? And currently, if I look at the way the pension works, is a contribution gets made into the pension fund, which one piece is the accrued liability, and the other piece is the normal cost. Okay, so there's two components. Previously with the OPEB trust, only one of those components went into the OPEB trust. It was the accrued liability. The rest of the other dollars for the normal costs were budgeted in our medical benefits line. Because when we were looking at medical benefits, working with our working with our medical consultants and looking at trends and projecting claims, we were looking at the total claim base as one, which was the retirees and the actives. And the Board of Ed did the same thing. So now, because the OPEB trust is going to be essentially getting credit for the paying of the claims, we're actually moving those dollars for the normal costs into the OPEB trust, which were previously budgeted in the medical self-insurance fund. I know this sounds kind of a little bit confusing. I was trying to come up with a good analogy. I did come up with one about the OPEB trust and the medical self-insurance fund by movie tickets, but if you're good with what I'm saying now, I think we can I
think we're good.
All right, good. All right. So, and this is actually a good thing. I mean, this is where we want it to be back in early 2000 when we started setting money aside into the self-insurance to a special revenue fund, and then in 2009 we set up with the OPEB trust with the idea that we would eventually get to this point, and this is where we're at. So we're basically 70% funded now. We're treating the OPEB trust like a pension, and when you look at future budgets, you're going to see that difference with the medical claims and the retiree contribution.
Okay, thanks, Jim. Other questions? Or questions on this transfer?
I'll move it, Joe.
Been moved by
Second.
Robert, seconded by Jeff. Discussion? All in favor?
Aye.
Thanks, Jim. Next is to hear an update from the Finance Director regarding last month's bond sale and to consider and if appropriate, approve a request for the following 2020 budget transfer from miscellaneous income, $182,728, from bond payment interest, $375,312, for a total of $558,540, going into interest payments, general purpose, $74,512, and interest payments, schools, $484,328. And Jim has a also recommended resolution here Resolved that the Board of Finance recommends to the RTM an increase in the appropriations for the fiscal year 2020 general fund budget from $115,336,659 to $115,519,387. This increase will be funded through an increase in miscellaneous income generated from the bond issue and will be used to fund an increase in debt service costs. So, okay, Jim, you want to hit the high spots on that?
Sure. And some of you probably were following this over the summer. Town of Brantford issued $45 million in bonds, largest bond issue in the town's history. It was a bigger bond issue than what we had planned in our budget development last February when the budget requests were put forward. One of the things that we, I think all in our discussions, and I touched upon this with the Board of Finance, agreed upon, was that, this presented an opportunity to issue more bonds than we would have. However, in doing so, we essentially locked ourselves in at a very attractive rate. And it also put some certainty to our costs going forward. And the bulk of the sale went to the middle school, but there was also money in there for the library and the community house. So we have really two things going on here. We recognized that we would need additional dollars in the budget. We had anticipated that we would get some premium dollars from the underwriters that were bidding on the bonds. We did get a considerable range, anywhere from $463,286, which was the winning bidder, all the way to roughly $3.4 million. So that was the range of bids that we actually received. And so essentially what we're doing is we're taking some of that premium and using it to cover the debt service. And then the other piece is typically when we have plans for a bond issue, we budget the anticipated interest, and then when we decide how we're going to allocate, whether it's schools, sewers, or general purpose, which debt service line item those go in for interest. So this transfer actually does both of those things. So all in all, it was a good event for the town. We maintained our rating. We were able to issue debt at a low price, lock in our costs, and do so without any additional, appropriations from contingency or fund balance, because the premium basically offset the additional dollars that were required to cover the 6-month debt service payment.
Thanks, Jim. Questions on this? So essentially, we're increasing the budget by the $182,000.
Yes.
And then moving the money over to enable payments for interest. Questions, Charlie?
What else is in the miscellaneous income?
Well, basically, it's anything that's that we can't categorize. So, but if you look at the budget over the past years, is the largest of those are typically related from bond issues, and we don't actually budget premiums. That's a practice that's been in Brantford, I think, for a number of years. There are some public entities that, in this environment, rely on the premium to actually, balance the budget, so they're anticipating getting a large premium. So,
Okay.
yeah, I could give you more of the details, but most of them are very small items in miscellaneous income. So,
Thanks.
Okay, somebody, other questions?
Move it, Joe.
Moved by Robert,
Second.
seconded by Jeff. Discussion? All in favor?
Aye.
Thanks. Thank you, Jim. And thanks to you and staff and all others for the good work on that bond issue. Thanks. Next is to consider and authorize the finance director and town treasurer to open an investment account with Washington Trust and to approve the following resolution. Resolved that the Board of Finance authorizes the finance director and the town treasurer to open a federally insured investment account with Washington Trust for an amount not to exceed $3 million. Jim has sent us a letter here, and I understand that between Bob and Charlie and others have done due diligence on this institution. Jim, you want to kick that off?
Yeah, a couple things. I think the operative word is federally insured investment accounts. One of the products that we're looking at through Washington Trust, and others offer it as well, is it's called the CDARS program, which is basically you're making a deposit, and then that's getting folded out to different banks and CDs. And then there's also a money market account, too, which is called an insured cash sweep. The nice thing about that is, one, the FDIC insurance, but as you might have seen when you look at the audit report, the town has a variety of funds, and some of them, would generate investment income. We talked about self-insurance funds, in addition to the medical self-insurance fund, you also have the workers' comp fund, for example, heart and hypertension fund. And sometimes it gets a little unwieldy trying to allocate interest, in a pool. What this does is, so for example, you take $3 million and you stick it in, let's just say, for argument's sake, the medical self-insurance fund. Well, then every month we get a statement in terms of what the investments are and what the balance is. It works out very well. We can book that every month. We're not trying to do an allocation quarterly of the interest. It's federally insured, unlike our STIF account, which is actually, our primary investment vehicle, but we have expanded and done others. And because it's federally insured, in a way, the FDIC is protecting these investments. So Washington Trust is really where it starts, and then based on what we asked for, we could put it in different places. They use a company called the Promontory Interfinancial Network. It's been around for a number of years. It's been rated well by the American Bankers Association. And one of the nice things about that network is if we use another institution to do a similar product, is that they control it based on our tax ID number. So even if we had a CD with Washington Trust and we had a CD with XYZ Bank, through that network, based on our tax ID, they would basically be able to see if we had exceeded the FDIC insurance. Additionally, we still have some work on our part, as we always do, is we would give them an exclusionary list. So we would say, we already have money in these banks, so don't use these banks. But it is a nice vehicle. Washington Trust has been around for a long time, but a lot of it's, well, who are the people you're going to be dealing with? And we had an opportunity to meet two individuals from the bank, and so all in all, we think it's a good product to take on. Historically, when we venture into these things, we don't go full bore. So the $3 million gives us kind of a lane to work with and see how we like it, basically.
Thanks, Jim. So Charlie and Bob, you had a good experience?
Yes. So what I took away well, after we met, Jim invited these two ladies, and they're from Westerly, Rhode Island, and they're trying to make a footprint here in Connecticut. And at the moment, they're doing a lot of municipalities, 17 total, but they have Stonington in Connecticut, the only one. But they were really pleased that Jim invited them here, because I took away that they will do a great job for the town of Branford, looking for a recommendation from Jim to expand their footprint here in Connecticut. So I think it's a good fit. They're also looking for a place to set up a new building, because they want to expand here in the state. And I just had a good feeling that they're going to outperform for us. Any comment, Bob?
No, I concur with you. We looked at the call reports also, from the FDIC. They all look great. They've been around, as Jim indicated, for a number of years, the oldest institution in Rhode Island, and also from the charter standpoint. So
Right.
I agree that it would be a good fit.
Okay. Questions from other board members, or I think we're good. Somebody want to move this?
I'll make a motion to move.
I'll move it.
Second?
Moved by Jeff, seconded by
Harry.
Harry. Okay. Discussion? All in favor?
Aye.
Thanks, Jim, and thanks, Bob and Charlie, for taking time to do that. Next is to look at our calendar. So to consider and if appropriate, approve and adopt a calendar for 2020 meeting schedule. Lisa sent that out. Thank you. And we've got the January, February, March budget hearings. A few dates that are moved around based on, I think, April presidential primary and Memorial Day in May, and then a religious holiday in September. So I think it looks pretty good. Somebody want to look at it or got comments on that?
No, the only comment is,
St. Patrick's Day.
we're going to remain here and not move over to the community center. We're staying here
Yeah, stay.
for the Board of Finance.
Yeah, I anticipate we'd stay here.
Yeah, our intent is to keep, many of the town meetings that are here because of though eventually we may have the ability to have BCTV film their live, but I think for the size of the room and plus BCTV will keep it here. So RTM, Board of Finance, Board of Selectmen will continue to be here.
Recreation Board has a nicer place over there.
So maybe in a future year, we'll go over there. So I guess for next year, at least we'll plan on attending here. So somebody want to move the schedule?
I'll move it.
Jeff moved it,
Second.
seconded by Robert. Discussion? All in favor? Okay, with no other business to come before the board, I entertain a motion to adjourn.
So moved.
All in favor?
Aye.
Very good. Thank you.
This program was brought to you in part through the support of the Town of Brantford. Watch town meetings and other videos on demand at BrantfordTV.org.